what do you think about the product offering for institutions? I mean, we have ETFs here now, but they're futures-based ETFs, and there's nothing physically backed in the U.S. Does that have to change?
Well, it would certainly help. I mean, look, my metaphor here, I have a couple of them. One is that the futures-based ETF they launched, BITO, is sort of like the USO of Bitcoin. You know, that oil futures ETF that, you know, some traders use, but it's only like 2 or 3 billion. It's not the GLD of Bitcoin, which is what everybody wants. Everybody wants a physically backed Bitcoin ETF. But Gary Gensler just is not into approving that anytime soon. So in the meantime, we've got the futures-based ETFs. And just to the point that he was making earlier, and another metaphor we'll throw out there, a lot of people in crypto are like, oh, who cares? Why do we need an ETF? But I think he understands that they can reach a lot more people. My analogy is, I don't know if you're old enough to remember when the Beatles did not go on iTunes for a long time. They held out. And when they finally went on, obviously it helped increase their sales to a lot of younger people who were never going to buy a CD, right? So this is sort of the reverse. A lot of the older people and the advisors here in the US are just not going to go to a Bitcoin exchange, but they will buy an ETF. It plugs into the plumbing very well for them. They trust it. It's regulated. And so that's why it's a big deal. And the advisory world has $25 trillion of assets. So even if 5% allocation, right, which is almost maybe small, that's $1 trillion right there.
Okay, yeah, so it acts as some sort of institutional on-ramp, doesn't it, for some people who wouldn't, as you say, go to buy the Bitcoin themselves. Eric, yes, and I do remember that Beatles story that you referenced. Eric, going back to what we were just hearing, though, from the Binance CEO about the role that crypto will play. He was saying this is the future of money. But then I talked to other voices who say, look, we've had private currency in the past. We decided as democratic societies that private money doesn't work. And why would we go down that route once again? That big picture question, how do we settle that, Eric?
Whoa, I mean, that's almost beyond my brain and pay grade to answer that. You know, that's a great question. So another former Bloomberg employee, Oliver Rennick, who used to be on TV actually there, he wrote a blog post about 2 weeks ago talking about the next guy theory and how the ETF, yes, you're going to reach all these new people, but at some point, who's the next person? Unlike stocks, which have intrinsic value or intrinsic rate of return because of dividends and earnings growth, this is a commodity. And so there's a lot of people who just think a commodity is only worth what the next person will pay. And this is a whole new area that a lot of people don't even understand. I think a lot of people want it because the price is going up. I think there's FOMO. And yeah, there's certainly this feeling that it is dangerous, it is risky, and the bottom could fall out. I think I wrestle with this all the time myself, so I don't know the answer to that, to be honest.
Well, there also seems to be a lot of FOMO in the ETF market with providers rushing to get in. Eric, I do have to wonder, though, could we see any of the titans of the ETF market, the Vanguard, the BlackRock, could they be playing in this space next? Yeah,
so BITO to me is just a first step, a first small step onto a five-year road. And at the end of that road, what's going to happen is you're going to see something like the Vanguard Total Crypto Market ETF or the BlackRock Total Market Crypto ETF, and it will be physically backed. It will hold all the crypto in market cap, in market capitalizations, just like the S&P. And it will cost probably 20 basis points. It'll trade at a penny spread, and that'll be beautiful. That's what the advisor world is waiting for and wants. It's just going to take a couple of years to get there. And we know this because that's what ETFs do to every asset class. They get in there. Usually the first ones are a little costly. Then the price war kicks in, and then ultimately you've got this utopia where you can get anything you want for a very cheap price and in a liquid wrapper.